Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is Tuesday, May 14th, 2024. We had the PPI data coming out today. Notably, yields spiked when the news first came out and then sank right back down to basically neutral. The expected inflation rate coming from PPI was 0.3%. It came in at 0.5%. This is from last month from March until April. And then the PPI year over year went to 2.2%. And we have in the core PPI last and expected 0.2, and it was actually 0.4 for April. And then the core PPI last was 2.8, current 3.1. So markets had a little bit of a hiccup. The AI, the automatic traders, got a little jolt for a second, and then realized, nothing to really write home about. These numbers they're nothing to scare people too much from. And it's funny, so many people, including myself, are going into these reports thinking it's like things are just going to go wild, and you have a day like today and nothing happened. And some people are saying now, well, it's the CPI that's more important. And honestly, CPI could come in exactly as expected, and nothing happens out of that too. So at the end of the day, the way markets are priced, it's all herd mentality. It's all what are people thinking and feeling. There's no mechanical reality to the pricing of securities, except for when things are clearly undervalued, and that's the easiest place to get advantage, like Ben Graham always talks about. And so that's what I'm focused on. This is especially a good topic to bring up on a day like today, when you see all over the headlines about meme stocks coming back, going up by 100%. And people playing that game, I mean, good for you. Roll the dice. Have fun. I'm not touching that with a 40-foot pole. I'll wait till I see something that actually has value that nobody wants, and I'll get some of that. And right now it's treasury bonds still. So I digress. So PPI today comes in hot, and what happens in the S&P 500? We go up by 0.5%. Pretty wild move right there. Again, nothing monumental going on here. We're near the all-time highs. Are we going to hit all-time highs and break through it? It certainly is possible, especially if CPI doesn't scare the markets off tomorrow. Again, I don't think this is smart money chasing stocks higher right now. I like to see a little more proven earnings in order for me to be able to come up with any kind of valuation that I can depend on. And S&P 500 as a whole right now just seems like a casino, a game of musical chairs. The music's still playing, and we're still walking around, and the price is getting higher and higher. And once that music turns off, and reality sets in as to what the value of earnings actually is in stocks, well, hope you have a chair. Fear and greed index ticked from 50. Notably, it was at 50, exactly 50 yesterday before today's PPI, and we moved a little bit towards greed. Certainly we could go straight the other way into fear tomorrow. It's impossible to really say. TNX 10-year treasury yield, I've been talking about this for a while, how we've been in this very obvious channel here. I'll doodle it. So even though my lines aren't straight, if you have a straight line, they're very straight, very sturdy. These lines hit the same line, like exactly. And today we're still not breaking through this, not yet, but we do have a pretty obvious bear flag. And like I've been saying, this candle right here, all three of these days are inside days, and so it is looking like it wants to go down from here. And if we go out of this channel after this larger bear flag pattern, this could move down significantly lower. I have been talking about it getting sorry, down to as low as 3%, based on some charts I've been the way I've been looking at these charts. So go Yahoo Finance. Sorry about all the doodling. Notably, REMX, rare earth metals. This includes especially palladium, platinum, rhodesium, all the super rare metals. Of course, this does have exposure to gold and silver, but it's more leaned in that direction. This had a nice pop today, along with copper, seeming like it's just going straight up, not just ignoring all the noise. These markets are, you know, like I've mentioned before. I think this has to do with what's going on in China. And as much as the markets are connected around the world, and the dollar is the U.S. dollar is the world global reserve currency, you can still have a little bit of separation, uncorrelated markets. So, being metals, especially copper, rare earth metals, can be involved with what's going on in China. And then the last chart is just triple Qs here. I talked about yesterday how this trend line / neckline of a head and shoulders had broken and confirmed, and it's going up. The triple Qs, the Nasdaq rose by 0.6%. We're still not up to the all-time highs, but at this point, like I've been saying, I hate I hate how dumb the markets are getting, because I can't participate in this. I can't be going long the S&P 500 or the Nasdaq when I look at what's going on with the valuations. But the herd wants to buy this, and so it looks like it's going to be going up. I'm not going to participate in this because it's too dangerous for me. I see this as gambling, and I don't see myself as a gambler. I want to do things that I have more confidence in. Anyway, that's all I have for today's show. Hope you enjoyed. Thank you for watching. Robschild.